BitShop, the first fully privatized on-chain auction house, introducing new ways to generate liquidity for Web3 assets, backed by KuCoin Labs and Republic Capital. Bid small, win big at BitShop.io.
Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone midday here, making it 1100 UTC. A big shout out to everybody joining the stream live today. I can see some fantastic faces on here. So good morning, everyone. Hans, saw you sneak in there early this morning. MM as well, Erica, GOT, Craig Parker, and everybody else that's on here. Ricky as well, see you down there. Good morning or good afternoon, wherever you are in the world. I hope we're all doing well. We're going to try and attack some alts today. Also focus on some FX if anybody's got some interest in that. So bear with me a sec. It's been a very busy morning. So just cleaning up a couple of charts and we will look to kick on. So does anybody have any suggestions right out the bat, or should we maybe take a look at Ethereum just to kind of work in? I mean, ETH for me has always kind of been king of the alts, really. So you can always get a reasonably good handle on what's going on in the market from ETH. Oh, but Neil is in there, early doors. There we go. So SHIB it is, mate. Let's take a look. Looks pumpy. Awesome. Let's take a good old look at SHIB, shall we? I don't think we've looked at SHIB on here for quite a while, actually. So it'd be really interesting to see what that's up to. I mean, that was an unbelievably volatile meme coin, wasn't it? That thing was just through the roof. So let's take a couple of notes here. Right, so we're going to look at SHIB first. Of course, Ricky, you love Doge, my friend, didn't you? Love Doge. Cool. Well, of course, we'll take a look at that as well. Link. Soul as well from Pisket. Hello, my friend. ETH, Doge, and XRP from Seb. Good morning. So we've got a few of those on there as well. So we'll throw XRP in there. Oh, but the 850 level on Doge, huh? Wicked. Let's take a look at that. Right, well, let's start with SHIB and let's see where we are on SHIB. Not really one that I trade, one we looked at recently, I think, because we've obviously blanked everything off. So let's really kind of zoom out and let's take a look at our daily chart first of all. 850 on SHIB. Sorry, Harms. Let's have a look then. SHIB. Perfect. Righty-ho. So, first things first, what have we got at the moment? So, I mean, price is basically kind of compressing in here, isn't it? We came back down, we set this big daily fair value gap here, showing this inefficiency as price really kind of dropped. And what's interesting about this is that actually it's really not been well respected, right? So what I'd be looking for from this is one of two things. One would be for price to draw into here, we get our rejection and then price rejects, or price kind of comes into this area here, runs through it, which we got in the initial hit, then comes into it. But then you want to see quite a clean breakout and ideally it used for support, right? And then from there, you've got a very, very clean inversion. So let's just make that a bit brighter. Yeah, and we can see here we didn't really get either of those. What kind of happened here, and it can happen sometimes when you have these kind of... That's purple, by the way, guys, because that's kind of being treated as an inverted fair value gap. Obviously, for these ones, we want to make these grey, or I make them grey anyway, just in terms of realising fair value gaps. The purple ones are inversions, although this is a pretty kind of sticky one here. So we see we had this drop here, right? Now these drops are, as we can see as we go up. Now once we've turned our bias to bearish, let's go right to the top of this. One of the key things we want to see, I know I can sound like a broken record on this, but I really like to see for a confirmed reversal, this real kind of spike up, yeah? You see how this is really kind of like, it's like a V, isn't it? You know, how that's kind of spiked up. Well, you look at something like this, for example, and it's not a V, but it's a little bit more of a kind of curve. There's definite kind of angles and aggression to this, right? So when we get that, something that I'm looking for here is, as we were discussing down here, right, is this inversion. So it's basically just a failed fair value gap. What happens? Price sets this bullish fair value gap. We expect just zoom in on that for you guys. We expect price to come in and find support here and move higher. However, what we do is we violate it, right? We break through it. And I really like to see this happen fairly effortlessly, right? So, you don't see price sitting there and chop around. You see it not respect it at all. Then when it comes back to it, it respects it. Back down again, respects it again. And notice how we're not closing above it. Now, when we get that, from there, what I'm looking to do, my principal thing here, is looking for fair value gaps. Right, so back to purple for these, back to grey for these, sorry, because this is a fair value gap. This is purple because it's inverted. Then as price loses this, we then look for shorts when it returns, yeah? Shorts, 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 shorts. And ultimately, this was really, really nice, this one. So as this happens and as we continue to drop, we're looking at, and I'll just do that with a very crass move with the drawing tool, right? We look for these fair value gaps to be respected, and we also look for these order blocks to be respected, right? So order block being respected, fair value gap being respected, yeah? As we go down, all we're doing is we're looking for this, and then we're looking for these opportunities like this one here, right? As price draws up into this and then sells off. Price then comes back into it here, sells off again, all right? Now, this one gets a little bit violated here, but ultimately contains price, which then sells off again. Now we're in this one, right? So that's the key one that's our focus. And let's get rid of these for a moment and just focus on what's current. So just as a little overview for everybody that might be new to the stream, in terms of kind of what we're looking for here. So this one I don't really pay much weight to at the moment, purely for the reason that we came up, we violated it. So we're looking for this to provide support. Now, in some regards, it did. If we draw in our equilibrium here, we can see that it wasn't really respected, but we can see it's formed some kind of support, yeah? You can see as it comes back in, it does hold price, sends it up, holds price again, almost think of this deviation price pumps, comes back down, deviation price pumps again. So we can see that there's some significance, right? But I'm certainly not looking to hang my hat on that, right? And purely for the fact that I'd want to see this up, retest, and then away. The fact that it started to hang around here didn't sit very well with me. So what would we do in that situation? Well, we would drag this back just for a second, just to make it look a little bit cleaner. Morning, James. Didn't see you in there as well. And MD Junaid. Is it Junaid? Apology for my crass pronunciation. Because I pronounce your name so terribly, of course, we will have a look at Pepe, my friend. So what do I want to look for here? Well, we've clearly come down and we've taken some form of liquidity here, right? So as we zoom out, and I'm sure if we go back further, we can see elsewhere, we can see that we've really cleared out this low, right? Now, that's a very key low. Why? Because as we can see with all the data we've got on the screen, we've not got a lower low, right? So there's a hint of recency on a high time frame, even though this is back in June 22. We can see how price came in and set this low. Now, price reversed here off the basis of this low, and quite possibly the order block that sits in here that preceded this big move higher. However, whenever we see a real clean high or low like that, I'm always thinking liquidity. So ultimately, price came down around this low here. And then look at this wick. We kind of covered this quite a lot on Monday's stream, actually, making sure that we're paying attention to the candles. If you compress the chart up a little bit, right, and hold it like here, the wicks can tell you and give you a really good guiding influence on where the price is going. Bergman, good morning, my friend. Yep, we are going to take a look at Doge next, mate. So when we look at the wicks, right, look at the big upside wicks that we have here, yeah? Real indication that price is kind of getting pushed back here. You know, we used our toy soldier example that in the case of this wick here, the battalion of toy soldiers has tried to make it that far into enemy territory, right? If it had been 100% successful, that would all just be one giant bodied candle. But actually, they got forced back to here. Not a problem at this moment, right? Because we've still got this huge bullish candle here. But what it says to us is, price has come up here. It's tried to make progress further and has failed. This candle here fails even more so. And then this next one, let me zoom in a bit. So this, the upside wick here, we get a little downside wick here as well. That's why when we see a doji candle, which is this candle here, they're often a sign of indecisive price action because you've got sellers pushing price back, buyers trying to push price forward. What this also gives us here is a couple of things. One, it gives us an inside bar pattern. Yeah, so that would have been the low of our range. That deviation would have traded us up beyond the midline, would have been a nice trade. And then the next thing it gives us is this indication that price is starting to lose its battle for progress. Yeah. So if we look at this run, for example, see what we get here. If we look at focusing on the wicks, yeah. So when we look at the wicks here, price tries to go up, gets pushed back a little bit, right? But then we get this beautiful bullish pin bar candle, yeah. For anybody interested to know more about pin bar candles or engulfing candles or about inside bar patterns, you can find that on my Twitter page, which is BC_Richfield. And I've got some threads on there just to save kind of going over it again because I really want to rip through some alts for the patrons today. So this is a pin bar candle. Basically, the small head and the long tail tells you that that's got bullish strength to it. So we would look at that as a continuation candle. All right. You can also look at them as reversal candles as well. But it actually turns out these type candles, engulfing candles as well, do work more reliably in trends. Yeah. Bullish bullish pin bar, trend continuation, bullish pin bar, trend continuation, right? Bullish pin bar here, a little bit of a longer nose, but we get continuation, and a bullish pin bar here as well, where we ultimately get continuation to the upside, right? Now here, where price starts to turn, we get this pin bar candle followed by a bearish engulfing that crashes through our fair value gap, right? So then, all of a sudden, our bias starts to change. We start to think, okay, weakness is coming in. This should have been strong support. It's now turning into resistance. We wait, we're patient. And then what we do is when price gives us the indication that it's ready to move, so all along here, right, you hear me go on about this pattern all the time when we're talking about execution, yeah? So let's just do this a bit thicker so it stands out. What are we looking for? We're looking for a sweep, yeah? That's our first indication that price is ready to move lower. Why have we got that kind of bias that we think price is about to move? Well, quite simply because we've inverted this fair value gap. It's now being treated as resistance on a daily scale. So we're saying to ourselves, okay, if we get what we want from here, which is we've got our high that's swept, we're then looking for a clean low, which is set here, yeah, because it's got two higher lows. Now, this candle here has now broken that low. What else has it done in that move? It's given us displacement, right? So you hear me talk about this a lot when we move lower and we want to punch through, you want to see an energetic move. Yeah, so price punches down to here and it leaves this fair value gap, which is our displacement. Now, when we pop that in, we're then quite simply, and I'll do this in red just so that it's a bit more symbolic. Help if I did it on the box, not the text. So this here becomes our bearish FVG, yeah? So from here, we're jumping onto lower time frames and we're looking to frame bearish setups, yeah? Looking for our bearish triggers. And then ultimately what we're doing is we're targeting clean liquidity, yeah? So untapped lows or highs if we were bullish, for example, equal lows. And then also looking at where price may ultimately be drawing to, yeah? The theory is that price is either heading for untapped liquidity above a high or a low, or equal highs or equal lows, or it's heading to rebalance and imbalance, which means that it's heading into a fair value gap to close that box. TXC, good morning, my friend. Erica, thank you. Yeah, do smash the like button if you do find the content useful, guys. Don't feel you have to. So, Sebster, quick question here. Where in a big fair value gap would you say the main support resistance level is? Top, middle, or bottom? Oh, brilliant question, Seb. So for me, in an FVG, the clear point that I'm watching for, that I like to see hold, and let's just use this. Let's use the big one that's on screen as an example, right? Is the equilibrium, yeah. So all you have to do for this one is just take your Fibonacci, yeah? So this is your Fibonacci retracement, not the extension. And you just want the 0, the 0.5, and the 1. Now, I turn my prices off, yeah? Which means, if you have prices and levels on there, right, it gives you all this data, right? Which is really, really cool and handy when you're using it for a Fibonacci. But when you're using it for this, you can have prices on just to symbolize, levels, which symbolizes the fact that you've got your 0.5. But, you can see it pretty easily with a range like this because all you're doing is splitting it with an equilibrium. So when we set this fair value gap and we saw price come in here, right, I would have been looking in here for bullish trade setups, right? I don't think we would have got any, because let's look at how the candle opened. Traded higher, took out the prior day's high, bearish. Came back down, took out the prior day's low, closed below it, right? Then when the following day opened, you see price came into here and got bought up a little bit. Now, when the following day opens, excuse me, if we were looking for bullish setups, yeah? So let me just draw you an example here of how we look at our days, right? So this is our day here, right? And what we're looking for, if we're bullish, right, what we want to see is price open, trade down into a discount, yeah, expand higher, then either finish there or most of the time it pulls back to here, yeah? And what you'll notice is that is the formation of a candle, yeah? So let's look at this candle, or any candle. Let's just look at this one here just as an example, yeah? So remember what I said there, right? Price opens here. Why? Because that's the close of the previous candle. Price then pushes up, bearish, because it's pushing up into premium, so we compare for short trades. Price then drops down, comes back up again, closes here. Yeah? So that's the simplicity of how these candles work. If we're bullish, we ideally want to see price draw down into a discount, find our long setup in here. So if we had a magnifying glass on this section here, yeah, and then within this section here we had a nice support resistance level, yeah, or a point of interest, arguably what we would see is we would want to see price come down, run that, yeah, back above it, bullish formation, and away, yeah? Meaning that what we've seen here is price sweep liquidity. This is in the down move that we get here. And then in this up move here, we see price break structure or shift market structure. And then ideally, we want to see price retrace into a fair value gap here, which gives us our entry, yeah? So that is what we're looking for in here. If we're bearish, however, what we would be looking for, yeah, is price to open here, trade up, trade down, come back and close, right? So we see the difference here. What we're looking for price to push up. So it's almost counterintuitive, right? We're looking for price to push up if we're bearish, so we can pair with orders higher up, get people offside, trap some stop losses, generate some liquidity, and then we sell down, all right? So just to give that a little bit of context. So when we go back to our chart here, and we're looking at our candles, one of the first clues here that this isn't willing to support price is that we just rip right through the equilibrium. Now, once we close outside of this FVG, then my interest is in seeing it as an inverse, yeah? So when price comes back into here, what do we set? We set a very small but significant fair value gap, yeah? So let me do that in red for you again so that stands out as bearish. So remember, these are days, guys. Yes, so price comes down, trade up, sets the fair value gap here. We're looking for a sweep, which we can see we get here. This high takes out that day's high. And then we're looking to sell off. Where to? Liquidity resting below the prior day's lows. When we revisit this area, as we can see we do again here, yeah, in this instance, we're saying to ourselves, okay, well, what are we drawing up into here? What can be suppressing price? And then we would look across here and say, okay, we've got an order block. Yeah, the last up candle before price sold away. What gives this more validity? The fact that it's also followed here by a fair value gap. All right. So when price revisits here, we've still got a bearish bias. Why? Because we still haven't closed back above this fair value gap, nor have we created another bullish fair value gap for price to reclaim, right? So quite simply, when we're looking at bias, we can look at structure, we can look at that. But what's really, really important is saying to ourselves, okay, how's price reacting where we expect a reaction? If we expect a bearish reaction here, but we don't get it and it blasts through and it's bullish, then we look for the opposite, right? For me, I'm waiting to see what price is telling me it's going to do rather than trying to enforce my will on the market, okay? So now we bring that into perspective here. We didn't get the cleanest inverse fair value gap here. So what do? Do you sit back? Do you do nothing? It's exactly that. You wait for price to give you an indication of where it's going to be going. All right. Nemesis, hey buddy, hey guys, hi BC Ritual. Can you check the link Link or GRT. Yeah, brilliant, mate. We've got Link on the list, actually. I'm just kind of blabbering a little bit as I do on this one, just covering some points, and then we're going to rip through. We've got Doge, Link, Sol, XRP, and Pepe. So just kind of trying to give some context, because last week when I reviewed the stream, I thought Monday we had a brilliant stream together, and last week we had some good points. But actually, something that we've been facing recently that I think has seen a lot of people get chopped up in this market is, it's all well and good and saying when you're in a trending market, yeah, brilliant, bearish fair value gap, boom, short trade, bearish fair value gap, short trade, brilliant, right? It looks really, really good. And it is, because when it works really well. However, as with most things, unless we're adapting ourselves to range trading, when we get into these consolidations, they can be a bit trickier. Yeah. So what we're saying here is we had our bearish fair value gap. We were looking for shorts in here. We probably got a nice setup here. We may have got stopped out on one here. And certainly when price blew through this, what does this tell us? Remember what we just talked about with candles, right? We've got a bearish pin bar candle here. Why? Small head, tiny nose, which is the wick sticking out the other side. You don't want that to be too long. Yeah. And this big downwards candle, yeah, that's showing us that what happened. Price broke through this, hit this fair value gap, and found an incredibly strong amount of sellers, yeah. So then we're just looking at the wicks. See how the upside wicks dominate here. We then get this bearish engulfing candle. Price ultimately sells off, searching for liquidity lower. All right. So that's how we're basing our analysis. So if we're putting that into current theory, yeah, so that we're not just focusing on historical charts, and this is what we're going to do from now, we're going to rip through this and smash into the other alts as well, is we've got this daily FVG here, yeah? So when we set this, price came up, found rejection here, also took out this high, yeah? Lovely. When we're taking out liquidity above the highs, as ICT would call it, buy side liquidity. Why? Because there's buy stops up here, sell side liquidity is at the bottom, yeah? When we take that out, again, look at these wicks that we get. I mean, do they scream to you that you're going to have big upside, right? Look, when we're in this move coming off the bottom, the long downside wicks. Yes, we get this big rejection here. Then we get a doji candle, tells us to chill. Then we get our nice telltale pin bar candle, yeah, like a hammer. Yeah, you see it referred to as a hammer candle as well. And price then starts to move up, right? So we've taken that into consideration. Now, we've kind of got a doji here, which is fair enough. But look what happens when we touch this, yeah? We came into this area. That's a really strong reaction. Price then ultimately sells up. Yeah, buys up. Sorry, would be a more accurate term, to take out the liquidity above these highs. Yeah. Once we've swept this, and quite often a free drive pattern, which is something you'll hear about in more technical circles, which is this. Yeah, so there's your original high, and then that high is swept twice. So the original high sets, that high is swept, that high is swept, and afterwards you can then often see a reaction in the other direction. All right. Without getting too much into that, what we're faced with at the moment is price kind of being trapped between this range, right? So we can see this fair value gap supporting price. Price has dipped back into this again, has now seen a bullish reaction. So if we drop this down onto our 4 hour now, just to try and look to get a little bit of closer context on this. Whack! Good morning, buddy. I'm good, thank you, mate. Moral, hey, bud, and thank you. Yeah, smash the like button if you're enjoying the stream, guys. It does help the algorithm, but good morning to everybody that's joining. So we're just looking at kind of like the compressed, kind of semi-messy price action that we're facing in crypto at the moment. And I mean, you can just see with this how this was just batting everyone all over the shop, yeah? But you can see that it does give you trade opportunities. As we're in here, we're holding a daily fair value gap, yeah? Fine, we've seen a rejection from another daily fair value gap, but what do? If we apply the same principles to our 4 hour, yeah, then we're looking in here, while we've had this bullish breakaway, we're saying, okay, well, does price hold one of these, yeah? Or are we going to lose it? If we hold it, yeah, we look up and then we're looking for the next resting liquidity, right? So we know before we hit this that if we get a bullish reaction down here, we've got our liquidity resting here, right? That's what we're aiming for before we hit it. Now, if we're looking and using our principles of premium and discount, we look at this leg, yeah, to this high. Right, and this becomes our premium discount range, meaning that we're favoring long setups from the green box and short setups from the red, right? So even with that, yeah, then what we're going to look for here is confirmation, or I like looking for confirmation, right? So let's draw these in and just review this so we can see what we've got. Now we know we've got two fair value gaps here. How do we know which one's going to hit? We don't. Like that's the God's honest truth about it, right? We don't. As traders, in my opinion, you never know what's going to happen. If people knew what was going to happen, then people would have ludicrous. Well, we're in the game of probability, right? So by allowing for our dealing range, which is our premium discount, just a 50% range, that means we favour shorts from the top, longs from the bottom. Once we see the price set in here, and bearing in mind it wouldn't have been there at the time, would have been here, then we can target these fair value gaps in here and say, do we see a bullish reaction here or do we see a bearish reaction? Yeah. So let's just draw this one on there as well, just to give a secondary example, because we're really going to fly through these next ones. Yeah. So price has set this higher, comes down. We're monitoring these fair value gaps here, actually, which I'm going to do in green. Yeah. We're monitoring these to say, do we get a bullish reaction here? If we do, we're trading it for liquidity high, which happens to rest above this high. Now, the reverse of that is once we've run this high, price comes down and runs the high again. Look at these long upside wicks again. Yeah. As price comes back down, we're expecting this bullish fair value gap to hold. Yeah. So when it doesn't, we're going to change this to purple because it becomes, as we talked about before, an inverse fair value gap. Now, when that happens, bearing in mind we favour short positions from here, and here, we would be looking for short setups. Yeah. Now, once we'd run across into this area, we would extend this higher, but we can see that both of these still land in premium. Yeah. So does that make sense to everyone? All we're doing is we've taken the expansion leg because we know we're trapped between this fair value gap here and this one up here. So what we're looking for are, while we're bullish, we're looking for trade setups from our bullish fair value gaps. When we're bearish, or when we expect this to be bullish, but it flips bearish, we're then looking for short trades lower. Yeah? Because we're just going to lock this in and we're going to take a very quick look on the lower time frame to show you some setup ideas, and continue from last week. Oh, whack! Had to leave London and head to Bali. I'd like to say I feel sorry for you, but I really don't. I wish I was leaving London and heading for Bali. It's beautiful over there, isn't it? I think when we went there, is it Denpasar? Is it the capital? Well, we kind of went right up to the north, stayed in this Vernalau centre. It was absolutely amazing, diving up there and just chilling out. Really, really cool place. Tulumben. Sorry, I've just been reminded it was Tulumben. Trader ZA, good morning, mate. Hi, BC Richfield. How do you decide if you enter a trade on a fair value gap or order block? Really good question. Let's take a look at it. So what we're talking about here is monitoring both, yeah? So for me, I always find that price is being drawn to fair value gaps to rebalance them, yet is attacking highs and lows where there's liquidity. Now, when we approach an area where there's a really key high and low, where we can see there's support and resistance, for want of better terms, then that's where we look for those order blocks. So then when we revisit those, it can then give us a really, really good indication. Yeah. So for example, this is quite a big one here. Yeah, but this was obviously prominent because this order block set here as price broke down. Pricing came back within this order block and held it and sold off. Now, I'm not saying that you would make an allowance for one this big. You would drive onto the lower time frames to find something more refined. But when you draw this across, I think it's hard to argue with the fact that touched it, successful short trade. Touched it, successful short trade. Back into it again, there's an argument that we're looking to go there. So one of the things I would say is I'm really, really happy to teach you about how I use order blocks, fair value gaps, bits and pieces like that. With stuff like that, I'd always recommend kind of going to the source. I learned a lot in my career from ICT, from his original mentorship, a lot from Trader SC as well. And one thing I'd always say is, whatever you listen to me on this stream for, or any influencer, such a horrible word, influencer, just any trader, you want to be listening to proper traders, first of all, not people that are just trying to shill you stuff. But when you find those people, still cross-reference their stuff elsewhere, and find out what works for you and other people's input on it. You want to really make sure that your understanding of it is what really suits you. When I originally learned about it, it was taught more as supply and demand areas, which is, you understand that, okay, there's supply in a certain area and there's demand. Demand would be down here. So you're saying, okay, when price comes back, is there demand? Yes, because price has had a bullish reaction. There's obviously demand here. Price comes back to demand again, bullish reaction. Is there supply here? Yes, meaning there's a lot of people looking to supply the product, meaning that when you get up here, the chances are that price is going to sell off. All right. So just very quickly, before we kind of dive deeper into that, let's just look in here and see how we're assessing this. Yeah, remember we're looking for longs from our green box, yeah, and shorts from the purple box. I'm going to pop the session breaks back on here so that we can just get a cleaner view. Let's take a look at a 15-minute chart first of all. Like I say, I normally take my trades based on lower time frames between sort of a 1 and a 5-minute chart, but I know a lot of you guys might not be able to do that necessarily. So now, see this first fair value gap here? See how price just kind of carves through it, right? Now, we're not willing to flip our bias at this point because this is a lower time frame fair value gap than what we're basing our bias on, yeah? So remember, we would need to have seen these both violated, price retest it and look to sell off before flipping bearish. However, as it sits, as we look in here, we can see once we carve through within our New York kill zone, yeah, that's when I'm looking to execute the majority of my trades. And what we would simply do is drive down onto a lower time frame. We can see we get a lovely reaction in there off the 15-minute. Just zoom in a bit so you guys can see that. So price comes down once again, regardless of the time frame. Look at the wicks. Yeah, that's absorption. That is those long downside wicks. That shows me that price is getting bought up, right? Now we get this little bullish reaction here. Price comes down and sets this. Price then kind of dips down here, kind of into this order block here, right? If you take the body of this, draw that across, you can see as price comes in. Then we're looking for our signature move, right? We're looking for price to expand higher after sweeping a low. So where's our sweep? It's here, yeah? Where's our shift in market structure? It's here. Where's the displacement leg? Here, yeah? Remember this? Why is it a displacement leg? Because it's broken market structure or shifted market structure and it's left our fair value gap, right? Now you can choose to target that fair value gap for entry. What I find typically works better with crypto is using the breaker candle, which is this one here, yeah? So that's the last up candle before price swept liquidity lower. Then when we close above that high, which we can see here with the red line, we activate this. So we would set a limit order here on this line. Price closes above, it would then tag us in here, right? And then ultimately it's our job to find a suitable upside target. We've got all these inefficiencies in here we'd be aware of, but our long position would look like this. We would have been tagged in here. Our stop loss would go a couple of pips underneath the swing low. And then we're saying, okay, are we going to be bold? Maybe target this order block here just because we've got those large inefficiencies in. Yeah, so that order block, those 3 consecutive candles, and then look at the drop here. Yeah, so there's a nice inefficiency to fill there, a fair value gap on the way up. So we would expect fairly rapid expansion. We get a 2R. What happens? Perfect. We hit our 2R here. Price gives us no reason. We got no breakdown there to get out of our trade, right? And then we hold. We see this lovely expansion, and ultimately we take out this key high. Yeah. So depending on how cast iron your hands were, you could have a 5.3 trade there. Okay. So let me get rid of that, tidy that up. But hopefully everybody understands, right? We're overlaying these same principles on different time frames. What we're looking for, the really important stuff we're looking for, is where we expect price to have a reaction. Yeah. So in this case, we highlighted our high time frame bias. Yeah. We know we're stuck between these 2 fair value gaps. Whilst we're expanding higher, we're looking to respect the bullish fair value gaps, yeah? And then when we give ourselves a reason to not respect them, yeah, because we expected this to respect price, it didn't. We carved through it, retested it. We look for shorts here and here while we're up in the premium part of our range, okay? So now with that, I'm just going to answer a couple of quick questions in the last 25 minutes of the stream. We're going to try and focus about 7 odd minutes each on Doge, Link, Sol, XRP, and Pepe, yeah? Excuse me 1 second, guys. Just going to take a quick sip of tea. Right, guys. So hopefully that all makes sense. We've got a question here from Seb and Craig as well. And Sebster, yeah, really love Bali, the 2-week entrepreneur training camp there. You know, I see a lot of them going on there, actually. Tony Robbins, I think, is over there. You get a lot of like yoga retreats and stuff like that. I thought, yeah, it was a really cool place. I was fortunate to travel around the Philippines as well, and that was just stunning. Just some of the most beautiful people you could ever wish to meet. Yes, just so kind. Anyway, before my mind drifts off into foreign shores, Craig, sorry, BC, do you avoid FOMC and bother trading today? Yeah, so it's a really, really good question. Like ICT would say no trading on FOMC, and I agree. I think FOMC is just such a high impact news event. What I am tempted to do is take some trades quite a lot earlier in the day. Yeah. So meaning that I would look, because for me, as in terms of my time, FOMC rate statement tonight, the interest rate decision and the rate statement both come in 7 p.m. Yeah, so what it allows me to do is trade the AM New York session, which for British Standard Time, my time is like my heavy focus comes in around about 1:30 in the afternoon. But I wouldn't really look to trade too close to it. I'd want my trade setups to trigger early. Otherwise, you can get in a mess. You just see these huge whipsaws. If you look at the lower time frame, you see these huge things that have been turned into being called Darth Maul candles. Huge candle wipes out liquidity, both at the highs and the lows, and you see these big upside and downside wicks with a relatively small body. Looks like a giant doji candle, right? So, really, really good question though. So I would definitely. I would definitely be cautious. I'd take my trades really early, or I would step away and I wouldn't look to trade at all. Maybe later in the latter part of the PM session, which is later in the evening for me here in London, once price action has kind of calmed down a little bit. Yeah, so sorry, Trader Z8. You've been really kind there saying something, but I didn't really answer your question properly, did I? So I watch for the fair value gaps. The key ones for me have to be around a kind of quite obvious point of support and resistance, an area that's capping the market. And I really like to see inefficiencies after them, so fair value gaps. The other thing that I would say is monitoring. Yeah. So if you get into the body of a fair value gap, like we did on the 4-hour one we've got on the screen, yeah, we can see here that when we get into the body of that, we drop onto the lower time frame. This one didn't give us any setups. No problem. This one did. And if neither of them did, yeah, we could then look towards the order block. Yeah. And say to ourselves, okay, is that kind of holding price? Or it might actually on a higher time frame be this move here, yeah, that we can see we've tapped into here and here. But at the same time, I wouldn't just blindly long or short them. I'd want to kind of drive into the lower time frames and look for that confirmation setup, all right? And then Seb, I'm more in tune with the fair value gap and order block breaker blocks. Okay, but now I see the price ping pongs up and down between the levels and getting stopped out repeatedly. Any advice for size of stop loss? Yeah, just make sure that your stop loss is in line with your position size, right? So, say for example, you've got $1,000 account. You don't really want your risk on any trade to be more than a couple of percent. So 2% on $1,000 account is $20. Yeah. So when you're setting your trade up, you want to make sure that your 1R loss is no more than $20. Yeah. And what will happen if you use something like my dear friend Resume's position size calculator? Let me just shill you this quickly. It's not a shill really. It's free if you join the group. But let's say we've got let me put a trade up here quickly first, just to show you this, because this is important, right? So let's say this is our trade, right? We've got this fictitious trade in here. Now we're going to get our position size manager. The importance of this, right, is this is our entry point. That's our stop loss. And that's our take profit. That's all the bits we need to put on. No, so I don't know if you guys can see. Oh no, hang on, I've done it wrong here anyway. It's caught up with myself. Let me re-add this, right? Because this is really important. Apologies for anybody that really knows about this, but I really do find that a lot of people don't get this. So when you get this, first line says add your position size. Yeah, I was too keen. Right? I ran ahead of myself, right? Then set your stop loss, and then set your target. What you then get up is this really funky little box down here, right? So let me drag that across here so you can see it clearly. I don't know if everybody can see that, but basically at the top we've got $1,000 position size. Our risk is 2%, meaning that that's $20. Yeah, we've got a leverage of 10x set to this, so that means that our position size to hit this trade needs to be $522. However, because we're using 10x leverage, our margin only needs to be $52 because we're borrowing the rest from the exchange based on leverage. Yeah. Our risk to reward is 1.85, meaning that if we win the trade, we win $36. Yeah. However, if we lose the trade, we lose 20, but we don't just lose 20, right? We lose $20 plus the fees yeah, on 522. So if your fees on that, for example, are $1, yeah, then you're going to lose $5.20 on top of your $20. So I think that's what catches a lot of people out, especially on low time frames, right? So make sure you're framing your trade from a risk to reward perspective around making sure that your risk element, your 1 hour loss, is no more than 2% of your account. That might be $1,000, it might be $1 million, right? But you want to always make sure your risk is reduced. And then with something like this, you can go on there. You'll notice if you put the leverage down to 1, all that does is your margin and position size become the same, because that's basically what you're using. You use leverage, right, to make sure that you're able to reach your position size through your margin, right? So when you're framing a trade, make sure you're doing it around your risk, yeah? Otherwise, you can basically end up taking really, really big hits, and it leads to really inconsistent trading. So with that in mind, I hope that's all been clear. Hans, you're very, very welcome, my friend. Trader Z8 as well, great. And Craig, my man, good to see you on the stream today, mate. Hope you're not getting caught up in too many work meetings, or I'm not keeping you from too many work meetings. So we've got 20 minutes left, right? 5 minutes each. Maybe we'll go over by 5 minutes with a Doge, Link, Sol, XRP, and Pepe. The good thing is with this, I think that we're starting next on Doge. I think we've had a really nice bit of TA running on Doge. So let's see what we've got on that one. That's been a regular feature thanks to our friend Ricky. Loves his Doge. So let's see what this has got in store today. Right, and we're going to rip through these guys. If you've got any questions, don't hesitate, fire them into the chat, and we'll crack on with them. So Doge was quite kind to us recently. TA worked out quite clean. It's been very, very nice. You're very welcome, Seb. So using exactly the same principles since we've been discussing Doge on this channel. Oh, goodness me. Going back well into last year, obviously, right? So we can see here these lines. What do they represent? Key highs and lows where we're expecting reactions, right? Because stops resting below here, we had kind of this cluster of relative equal lows. Price ran it, nice reaction. The assumption is that when we've taken buy side or sell side, so stops from the highs, stops from the lows, that we then come back within. We're then looking for, what did we say before? Just a super quick example on here, just so, you know, I'm a big fan of repetition. I think it really helps. Keep it simple, but make sure that you're practicing it. What have we got here, right? Anybody tell me what this is? So we've got our key liquidity target. We've run this. Yeah, price isn't expanding higher. Normally, this would be a bearish fair value gap, right? So we'd expect price to reject here and sell off. However, it doesn't, does it? Closes above it, meaning it becomes an inverse fair value gap, which means that we're then in here looking for long setups. Where to? First of all, resting liquidity above here and above here, right? So what happens then? Yeah? Yes, GOT, James, well done, well done. Inverse FVG. So then once we've taken this on, what happens? Our bias changes, right? So we then get expansion here and we've taken out this high. So then we're cautious, right? Because we then want to see the bullish fair value gap that follows it respected. Now, even though we had a deeper than average correction through this, price ripped through here. Why? To take out all these stop losses down here, right? When it reclaimed it, we're then looking for long setups in here. Yeah, because we're now back within the fair value gap. Long setups where to? Resting liquidity above here, ultimately then above here as well, right? So this doesn't change. Yeah, this is why I've left the TA on this one, right? Because we've been following this through for quite a while. So now where are we, right? We are still very, very bullish here, right? So price came up, respected this fair value gap. What did we get? Bullish continuation. So what's happening now? Now price is drawing back down into this. Another daily fair value gap. Yeah, so we would have been looking for long setups in here when price drew in. Yeah, unfortunately for us this morning, that was 1 o'clock in the morning for me. And price has actually continued to just sell off. So that was the Asia session there. So that's what we're looking at. We're saying, okay, what's happening in Asia? Because the Asian session or any particular session, Asia, New York, London, etc., they're the main three trading sessions, then you can use those as liquidity, right? So if you run the high of the Asia session, for example, that can cause reversals. And we'll cover that in more detail on another session, right? But for now, what are we looking at? Well, really simply on a daily scale, we want to see this hold for bullish continuation. We really zoom out. we can see that this was a really key place for price to find a rejection, because we've got this really clean, untapped high here that we can see prices run through an absolute treat. So now prices run through that. If we start to hold here, yeah, then the first thing we're going to do is we're just going to drag this back a little bit, right, to here, because we've run this liquidity now, right? So what are we looking for? Well, we've got new liquidity up here now, because anyone that was short up here have got their stops above here. So if we do hold this bullish fair value gap here, we look on the lower time frame to just get a nice and break of structure. As long as we hold this fair value gap, then my bias remains bullish and we're looking to attack the stops above these highs. Yeah? This high, sorry. However, if we do the opposite, we inverse this fair value gap and retest it, then we're looking for price to draw lower. That's how I would be looking at this at the moment, right? So there's nothing overly clear at the moment. We are heading into FOMC. However, I would be favouring shorter trade setups here, purely based on the fact that we've run key high time frame liquidity here. Yeah. And quite often when we see that happen, and again, if we zoom out here on Doge, we can see historically key liquidity, corrective move, key liquidity run, corrective move, key liquidity run, corrective move, so on and so forth, right? It doesn't always happen that way. If we look at this one here, this long red line coming in here was a key level. Yeah, this one here. What happened? Price ran it. Yes, we did get that initial move lower. However, we then held this order block and price said, hang on, I'm still not ready to turn completely bearish here. Yeah. So once price held that here, we say, okay, what happened? Price came up, set our fair value gap. With this being respected, it then allowed us to keep our bullish bias, right? So henceforth, why we had the green arrows down here. At the moment, this is a little bit indecisive. So what are we going to do? Drop to a lower time frame and see what that tells us. Yeah. So now on a lower time frame, we just mark that up. Their H4. Just check something quickly. Yeah, very small fair value gap down here as well that could be drawing price lower on a daily scale. But in terms of cleanliness, and the highest time frame that shows a clean fair value gap here is the H4. What we then do is we can then take something like the hourly and refine it further. And this is really good, right? This can be a really handy exercise because here on the hourly we can see the price is actually holding this. And if we go back again to our premium discount range, yeah, we can see that we're now holding this bullish fair value gap. We've still got a bullish daily bias. Yes, we've run sell side, but we haven't had the breakdown yet as confirmation. So in here, we can say to ourselves, okay, we're holding this 4-hour FVG. Let's delete this for a minute just to give ourselves a bit of clarity. We're down in the discount portion of our trading range, yeah, of our dealing range, sorry. So we're now in the hourly fair value gap. We've refined it further. The green arrow lets us know we're still bullish at the moment until proven otherwise. So what would we want to see in here? Well, this bearish fair value gap, if we can flip that to bullish, yeah, so that would be purple. Let me just drag this off to the side. Yeah, so if we see this flip, we get support here, then we're moving to lower time frames to look at it. First of all, attacking liquidity above this high, holding these highs, and so on and so forth to the resting liquidity above, right? So we're just decanting down the time frame. So for me, that's what I want to see at the moment on Doge. I think I would want to see this hold. Ultimately, if we lose this and we start to break down, then we're going to invert that 4-hour fair value gap, and we can then kind of look to shift our bias back towards being bearish. Okay. So, excuse me, that's SHIB and Doge covered off. Next, we're going to take a quick look at Link. Excuse me. The FA team has been telling me that Link has been running really, really hot recently. Where's my Link gone? It's weird. I'm sure we looked at that last week. Should be in here, shouldn't it? is strange. I don't know where that's gone. It is on there somewhere. Just obviously being a bit blind. Here we go. You know what? It's at the top of my chart. This funny enough because I've got it done by symbol, meaning that this has got a green flag at the moment, meaning that the fundamental team have made a recommendation here that this has obviously seen some bullish price action. So what happens when we see bearish conditions ensue and we see some what we would call maybe unsustainable price action? We look for reversals. Yeah. So actually today, as we're doing, this is an interesting one because we can see, just for context, I've found this 7.229 level quite key, right? So that's why that's on the chart. I'm always keen to see how price is reacting around it. We can see, as we go back, it gets a bit messy over here, but actually this was a really key pivot as price was making decisions. Once we got back below it here, we can see how it really, really struggled to get above, sold off, found resistance here, blitzed through it. So again, this can kind of help us with our theory here, but we can see from the arrow on the chart from the previous analysis, which I'm not sure if I did that Monday or if this was from just slightly before, and this arrow might have been representative. We might not have had the price action then. But we have kind of got what we were looking at here, right? So price has come down. We're in this bullish fair value gap. So at the moment, we're looking for that to hold. But on a daily scale, when we're looking at applying recency in here, we can see that we've got a daily bearish fair value gap now, right? So that for me is significant. It was a week ago, was it, Erica? Awesome. Yeah, that would make sense, wouldn't it, with these being daily candles? So, very, very good spot. Always rescuing me, you are, Erica, with your logic. And it's much appreciated. So, yeah, expansion higher. Theory is, well, we're going to come down, find support here and move higher. The only thing that played outside of that theory was this key resistance level here where we expected price to sell off. Ultimately, we got our deviation here, right? Got our deviation, price came back underneath and then looked to sell off. But we were waiting for confirmation, and now I think we probably have that here. We've got this bearish fair value gap here. Quite simply for me, if we see this hit here and we get short setups and I'm trading it lower, if we rip through this and treat it as support, then I suggest that we attack these. I suggest that my suggestion or theory is that price is going to be attacking the stops above this high. Yeah. So let's rip this down onto a 4 hour quickly. And we can see how we were monitoring this H4 FVG here, and we turned it purple because our theory was that we would come through it, which we've currently done, and that we would then look to it for resistance, to trade lower. Now, I always want to put attention on the higher time frames, right? Because at the moment here, really, I think this fair value gap, which we set here on the daily, I would want to see price draw into this, So at the moment, I'd be putting a little bit of weight on this H4 one, but only if we saw another strong rejection here, because then I'd be saying, okay, well, look, in terms of a 4 hour basis, then this for me is, we're in a sell model. But it makes sense because I'd expect us to get into a lower time frame sell model to get down to fill one of these inefficiencies before finding bullish price action higher. However, I would like to see price come into this area and then look to break down, in which case I'd look to be going short. Would I trade a rejection off of this? Probably not going into FOMC. I would still favour the rejection on the higher time frame. And then let's see what the hourly is telling us, right? So this is where it's really important to have your higher time frame bias, right? Because if you don't, at the moment, you're bearish on an H4, you're bullish still, or waiting for confirmation to be bearish on the daily. So if you just throw it in and go, do you know what? I'm bearish on the daily, I'm just going to go short. Look what happens, right? We've got the H4 fair value gap here suppressing price. Fine, you might get a rejection there, but you don't know. We've got this bigger hourly fair value gap here currently suppressing price. But on an hourly scale, we can see that we've swept liquidity of the lows, We've taken out this high for our structure shift. We've taken out this high here, certainly this high here for our market structure break. And what we're currently doing is respecting these fair value gaps. And these are bullish fair value gaps, right? So if we wanted a real hardcore confirmation setup and say price doesn't run to our daily fair value gap, let's say it's too weak to do that, We get a confirmed rejection here. We flip this, yeah, from a bullish fair value gap offering support into an inverse fair value gap. That's where we can hunt our short setups, yeah. So that's what I'd be looking for there, right? Overcome this and start to push higher. I still may be very short intraday longs into here, yeah, into this daily fair value gap. But once we're in here, then I'm very much focusing my attention on being bearish again. All right, guys. Lots of love back at you, Erica. Thank you for your exceptional memory. What one are we on next, guys? So Link, Sol, perfect. Let's take a quick look at Sol. I imagine we're probably going to have a few of these also looking a little bit similar, but there might be just some little kind of intricacies that we can pick out as well. So our old friend Solana, what are we doing on a daily scale? I mean, we can see on the hourly how we're drawing up into this fair value gap at the moment. Again, look, beautiful fair value gap set in here. Price rebalances, sells off. Another fair value gap in here. Price comes back, rebalances this and sells off as well. Come on, Trading View. There we go. Always, Erica. Always, my friend. So actually, really similar, right? So we can see here from previous, we had our premium discount range, yeah, which when we want it to be a little bit less obtrusive on our charts, we do that. In here with these lines, we now need to extend that up. So I'm just going to take that off of the screen for the moment, just so that that's a little bit cleaner. So really, really similar here, actually. Daily fair value gap, currently holding it kind of just really by the skin of our teeth. What's interesting here is that we're now drawing into a daily bearish fair value gap, right? So this is going to tell us a lot. Let's just do that in red so that stands out a little bit for you guys as well. Perfect. So now we're in here, we're saying, okay, if we hold this, if we get our rejection here, then the assumption is that we're going to be moving for lower prices, right? Stops below that low. Ultimately, that I think is the better target. Yes, we've got an order block in here. We don't want to worry about that too much until we come into contact with it, right? Then we want to be taking our positions higher than that anyway, and then monitoring when we kind of get into the body of this order block. And this at the moment is looking really, really clean. And actually, we can see that we've got this H4 overlaying this here, which we're currently in. See if he wants to let me do that. There we go. So this is really nice because we've got an overlaying high time frame bias with our middle or sort of lower time frame bias, which is our H4. Yeah, before we get down into any of our execution charts. Kelly, hey buddy, great to see you. Kelly joining us all the way from New Zealand, probably the country that's highest on my list actually of wanting to visit. One of those countries that you're never sure you're going to come back from when you go. So you've got to make sure your affairs are in order. So what are we doing? Drawing into here. What have we got down here, right? We've got this key level down here as well. Ultimately, we're looking, I think, to attack on a lower side, liquidity resting below here. So again, what do we want to do? So we've got our bias here. I think if we really rip through both of these, yeah, we would look for price to then come back down into them. Right? One of the key things that we would do is we would monitor this area here for possible long setups, yeah? So then these would ultimately turn into inverse fair value gaps, yeah? Meaning that we've lost them as resistance, we've now flipped them to support, and then we look for long setups in here. It's entirely possible that it doesn't respect it and it comes back underneath, but that's no problem because then we typically won't get our long setups, right? So that's why it can pay to search for confirmation. We can see how well since breaking down, the price has come in, fair value gap here, respected, rejected price further, fair value gap here, respected, drive price further. So remember what I was saying. We're either looking for price to respect or be drawn to a fair value gap and respect it. Yeah, and we don't know where. It might draw really, really deep and then break down. That's why we monitor. That's why we use time and price. Yeah. So remember, we're in a bearish trend. We're looking for price to attack the lows. Yeah. Where the obvious liquidity is resting after rebalancing a fair value gap. Price comes down, drawn into the fair value gap, then attacks the lows. Yeah. Then we get the same thing again here. Price drawn into this fair value gap in here, then it attacks the lows here, right? Now, what we're saying is, are we now going to get the same here where price draws into this fair value gap, we get our rejection pattern and it attacks the lows? Or do we flip this, look for support, in which case we're then looking for longs? So for me, that's exactly where I'm sat at the moment on Sol. Right, we can see as we break this down a little further, look how well constructed this is. Yeah, what I mean by that is look how you've got inefficiencies here, 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 here on the leg down, meaning price is really pumping lower. However, what we're doing here when we look at the hourly is almost building this kind of, almost a rounded bottom, right? Which you would see on higher time frame charts and higher time frame traders that play these, which they do incredibly well. Yeah, you see this? See how it just kind of has that rounded bottom to it. It's a nice construction here. There's not many inefficiencies. Price is filling itself and it's building up really well. So maybe we do see this flip above. I mean, it can be a little bit tricky today to take a quick look at equity markets as well. Again, there's no exact direct correlation at the moment, but ES today is down, which is the S&P 500. NASDAQ is down even heavier, meaning that tech stocks are taking a big hit today heading into the FOMC. But the dollar's weaker as well. So again, could just be the fact that we're in this really, really news-driven day. However, my bias remains the same. I'm always aware of the news, but I really don't want to let it affect my bias too much, especially if I'm hitting my triggers and my setups. So at the moment we're seeing this bullish expansion, this is going to be one of two things. Price really finding momentum, looking to flip this from resistance to support, or this is price being driven higher as a manipulation to then break down, ultimately retest this, and we look for lower prices. All right, guys? 5 minutes over, I know, but I did promise XRP and Ripple as well. So let's flick back to our daily chart here. We'll grab a slice of XRP. I think we might have been doing this one on a Binance chart. I think we had a little bit more history on this, and we were doing some longer term ones. But because we're focused much more on recency here, this we can see like news driven, huge candle, right? Now, these are really, really dangerous, these candles. I know some people that are really, really good breakout traders that will, really dive into this to get some action. But actually, the first thing I'm going to do is just zoom out a little bit more here. And aside from the fact that this will still be massively affected by Bitcoin, yeah, look at this. Relative equal highs. We've run key liquidity here and seen this big sell-off, yeah? So whoever the very smart buyers were down here or down here, again, like we've always said, if we're looking down and we want confirmation of what kind of buying setup we're in or selling setup, what we want to find here are starting with our inverse fair value gaps, yeah? So, expected bearish reaction here, broke through it, lovely, found support here, beautiful. So we're then in a buy model. We can see the support offered here by this fair value gap, right? Ultimately, price then draws back in. We don't have a fair value gap in here, so we target the order block. So we can see that the order block was respected here. Now we've had this big expansion. What's going to be difficult here is on a weekly scale. Bear in mind, this is weekly, right? The argument is if we were looking at this as kind of order flow, like ICT would teach, you would look for your reversal here, your accumulation, and then reaccumulation, or you'd be looking for your reversal. Maybe this is your accumulation, reaccumulation. This is the pump that's then going to lead to our reversal coming higher. When you get these really, really big moves, it can be quite difficult sometimes to kind of hone in on a specific area. But all we can do is take what's in front of us on a daily scale. Price draws into this, we're going to be looking for bullish continuation, right? However, before price draws into that, we want to be aware of what we've got up here. And have we got a very, very, very skinny... it's really, really skinny, but it is there. There's our inverse. See this tiny gap here? Bullish. Got an initial bullish reaction, sold off, followed by a bearish fair value gap here, Fine, we haven't retested that. Let me just do that red just so you guys can see that. So for me, actually, I think we're delivering, well, we're definitely delivering bearish price action here. Yeah, so we're in a sell model. And it makes sense, right? Because on a higher time frame, we can be in a sell model looking to rebalance this and then revert to a buy model, right? So what we can do here is go to our 4 hour. And now we're looking for similar, right? And what I'm looking for here on the 4 hour is this fair value gap, which we're expecting bearish price action from. Yeah. Now, we haven't delivered that yet. We're not within our kill zone at the moment, but we really want to monitor that. We then drop this down to the hourly. Again, we can see here we've got this bearish fair value gap. Do we continue to respect that on the H1? That's what we want to see. Yeah. I think if we do, moving into New York, and again, remember, from my perspective, I'm looking to take trades quite early in the New York AM session, purely because we've got FOMC this afternoon. But that would be my play there. Or if we were to really bust above this, yeah, and come up here, I would look for this. I would want to see this hold as support, and then I'd be monitoring long trades in here up to liquidity resting there. All right. So that's my current thoughts on XRP. And then just very quickly to finish off for you guys, however many of you soldiers are still here after an hour and 6 minutes, we're going to take a look at Pepe. So Pepe, we've got this one on the spot contract, but obviously remember, if you are going to trade this futures, make sure you've got the USDTP version. I just want to zoom out a little bit more on Pepe here, just so that we've got as much kind of data as we have on the spot. We can see, obviously, even on the 1 hour, we've got that big inefficiency here, big fair value gap staring us in the face, right? So we didn't actually rebalance this at all. Price just continued to meander down and down and down, right? So, okay, anything in particular interest? Well, we're coming down on a weekly scale into this bullish fair value gap. On XRP. Oh, okay, good question, Zambuka. Let me go back and take a look. I might have just been a little bit lackadaisical with that, but very, very good point. Let's go and have a look at that in a second. We'll pop back to that before we finish. This is very much of interest for me on a weekly scale. Yeah, inverse fair value gap, bearish, close through with a bullish. Are we now looking to hold that as support? On a daily scale, we can see that we set our bottom a little bit earlier down here, right? But again, kind of in line with the inverse fair value gap on the weekly. We can see we got this one on the daily when it closed above here, giving us the opportunity for some really nice long trades. However, we do want to obviously pay attention to recency here. We've swept this high. We've now broken down here, right? So we definitely find ourselves in a sell model here on the daily. Bearish fair value gap in here. Now we've kind of interacted with this a little bit. For bearish plays on the higher time frame, I'd like to see this respected and then look to trade lower. However, if we don't get that, again, we're looking for our inverse fair value gap price to find support here and ultimately make a move for this high up here, but also looking to take out all of these little highs here. Yeah, you can see the liquidity resting above these where they've not, that's not run that, that's not run that, that's not run that, etc. Right. So as we look at that on the way up, excuse me, dropping to a 4 hour. Yeah, again, we can see here this overlays actually this fair value gap really nicely with the H4. Maybe for some sort of little intraday plays here, we can see we've got this bearish fair value gap here. So this will probably tell us a lot if we are looking for this to be rebalanced. Right, we just get rid of that quickly. If we're looking for this to be rebalanced, we always want to favour our higher time frame. Then quite simply, we want to see this overcome, turned inverse, and then we can look to take intraday longs into this, right? However, we get the opposite here. Price rejects here aggressively, and on the lower time frame, we get our lower time frame breakdown pattern. Then we can look for price to look for lower prices. Yeah, look for price. Yeah, to look for lower prices. Bit of a rubbish term, but there's accuracy in the statement. All right. So that's where I'd be looking at Pepe at the moment. For me, it looks like it's pretty aggressive in a sell model. However, we do want to be aware of this weekly inverse FVG because that could really play a part in supporting price. But within that, we can also see we have these other inefficiencies. Yeah. So if we're looking for something to line up, here's our H4 fair value gap, yeah, which we would expect to offer support on a bullish scale. So that overlined with this inverse, if we did purge down to here, again, that's why I'd be sort of semi-interested in taking short setups from here, because maybe we go into this, come down into this, take out this low, rebalance this fair value gap a little bit on the H4, drive into this weekly inverse, yeah, and then you can imagine seeing price doing something like this, right? Having a recovery, and then we could look for higher prices from there. All right, guys. Now, just for Sambuca 1977, let me just pop back on that chart for you, mate, and make sure that I haven't missed something else out on there. XRP, we were on the Bybit chart, weren't we? Just a quick sip of tea. Here we go, my friend. I believe it was this one, wasn't it? And your question was, why aren't you looking at the FVG on that last bearish candle on the H1? So just to run over this again, here's our bias from the daily, bearish bias. We're expecting price to draw back down into here. Might not happen. We have taken sell side liquidity here, so we could be pushing up to make an attack on this or purely to rebalance this before moving lower. The current theory is that we're favouring bearish setups here. Now, I always pay homage to the higher time frame, right? So the higher time frame fair value gap, so this is the 4 hour that we've got here. When we now move to a 1 hour, yeah, then I'm looking for this fair value gap here based on recency. Yeah, this 1 hour bearish fair value gap has traded into and sold off. So that gave us a really good trade here if we were trading the London session, right? Now, we're looking for the same thing to be respected here. For price to draw into this, find a rejection here in this fair value gap, and ideally this order block here. However, if we don't, we come through and we treat it as support, that's when we can start looking for higher prices. Yeah. But in this instance, purely because we're in a higher time frame bearish fair value gap here, for a little bit of extra security, I would want to see that closed above. Yeah. And then I'd be looking for retracements here. So pullbacks to then get long targeting here. Does that answer your question, mate, in terms of why aren't you looking at the FVG on that last bearish candle on H1? I mean, do you mean this here? Might be a fair value gap in there. Do you mean this one, mate? Maybe there is. Very, very thin one. Okay, mate. No, it's really, really tricky sometimes, but always brilliant question, though. Really, really brilliant question, because we always want to question ourselves and always welcome questions on this, and you dealt with it in a very polite and respectful way, which I always admire. And I'm very thankful to get from all of you lot as well. Very, very, very rarely we get a bit of a wrong one in here, trying to kind of gain some clout, but most of the time they learn very quickly this is a community for education and a good bit of fun as well. Look, guys, I really, really hope that's been interesting for you. So I'm sorry, I know it was a long stream again. I keep getting told for the sweet spot for you guys, I really want to try and get these down to about 40 minutes, but I tend to be running longer and longer. I hope you found value in it, guys. I really love being on stream with you all. It's so nice, excuse me, to see what a group that we've built together here. Brilliant questions, people craving for education. I love seeing you guys on Twitter as well, the way, if you're on there, that you develop and around the nest. But look, huge thank you to everyone. We had loads and tons of people on the stream today, which was really, really cool. Excuse me again. Cough developing there. So I'm going to be back live again on Monday. Really looking forward to that, guys. If you are interested in joining the nest, coming and being a part of with myself and the team over there, you can find descriptions, offers, and all kinds of goodies how you can get involved down there. And also, please don't hesitate to reach out to me on Twitter. All right. Love the long lives as well, and some of you guys are absolute soldiers. Sidiums as well. I didn't see you on there, mate. Thank you very much for joining the stream today. So let me try and run through and see if we've got all the legends on here. Nemesis, Kelly Barker, Trader ZA, Sidiums, Zambuca, Erica, obviously, Sebster, Hans, my man, who was even on Twitter with me this morning before kicking off, James, 14, brilliant to see you on there, GOT, always a welcome sight, Craig, My friend over there who's always trying to fit these in amongst work as well. Whack was brilliant to see you. Hope you're enjoying your time back in Bali. Moral as well, brilliant to see you on there today as well. TCX as well. Got your pleasure of your company today as well as Bergman, MD Junid as well. Probably pronouncing that hideously. Apologies if I am. Pisket. Ricky Garcia as well, our man with Doge. Absolutely loves Dogecoin. Just a huge thank you to anybody that joined live today. Really, really do appreciate your patronage. Like I say, check this out. Let me know. To reach out to me on Twitter if you're firing any trades, set up some bits and pieces. I'll always be happy to share your stuff and introduce you to a larger audience. So have a fantastic week. Make sure that you trade safe. Please do be aware of FOMC later on today as well. Keep an eye on the news calendar because I think we've got a few kind of potentially volatility-inducing news events coming up this week as well. All right, guys, have a fantastic week. Really look forward to seeing you around the nest. Take care.